Facebook has a huge problem. Aside from the obvious, the 25% plus drop in its share price today, not only the worst market drop in the company's history, in fact, stock market history, wiping $200 billion off the price of a company in a single couple of hours, but also some of its fundamentals aren't stacking up just as good as they used to. However, it's not all bad news for the company. There is some good news around the corner as well, and I'm going to get into that. So there is some sort of caveat to the massive bloodbath that has affected Facebook stock today. So let's get in there and let's take a look. Hey guys, let's take a look. So 26.17% drop. Look at that cliff edge right there. That is absolutely insane. As I said, 200 billion gone, 26% gone. What a sell-off in the market. What a volatile market we're in right now. And that should come as a warning to all investors. If a company such as Facebook can sell off, or Meta can sell off this hard, then it can happen to any of the healthy companies out there. One of the good things to look at though is that there was a lot of support. So the company sold off bad, but then literally instantly lots of buying activity took place as well towards the rest of today. So there is some support there. The company has obviously dropped to $2.38 a share, but there is some support there, and it doesn't look like it's trending too much lower, which is a good thing. The market cap is still sitting at $665 billion for now. Anyway, what sparked this sell-off? That is what we really want to get into. So this is the big problem, is that the company has had some of its market share stolen by TikTok. Obviously, Facebook wants your attention. That's what it craves. That's what Meta craves. Instagram, Facebook, all of these things need your attention all the time. And TikTok has got a little bit of magic right now, which has worked particularly well. Its algorithm is holding, especially young people, incredibly well. And that is what has taken and stolen some of the market share away from Facebook. And this is the reason why right here the average daily users has just dropped off just a touch for the first time ever in Q4 2021, which has sparked a massive amount of fear coming out to the sell-off in Facebook. So also, what was also not very good at all is Quest 2 sales did do all right for the Meta universe. However, it still lost $10.2 billion over the last year, which really isn't great at all. And as you can see here, it's not doing particularly well. So the labs haven't done as well as they should. However, on the caveat side of that, this is very early days for Oculus Quest 2 and the metaverse as a whole. So yes, the company is losing a lot of money on it at the moment, and that is understandably so. It's a completely different way of doing things. The metaverse is a completely new, revolutionary way of achieving things, and a new version of the internet, and a completely different way to socialize and game. So there's going to be some top heavy funding going on in that first. So that is not ideal that they're losing that much money. But then again, moving on to the more positive side of things, the company still generated a significant amount of revenue, of course. It actually beat just slightly on its revenue. It has over $48 billion in a cash pile, in cash, ready to invest in, obviously, the metaverse or other growth opportunities. That amount of money to invest cannot be sniffed at, guys, and cannot be underestimated. That is an awful lot of money to move forward and to start working out of a way to compete with TikTok, or just move into other growth fields. So as you can see, there's other side of things here as well. They completed a share repurchase. I bet they wish they waited until the 25% dropped, but they repurchased 17.8 billion and 45 billion of the Class A common stock in the fourth quarter, and they had 38.79 billion in authorised for repurchase. So they could also use some of this 48 billion now to scoop up some of these shares that are now trading at a 26% discount. They could easily use some of that money to reduce the outstanding shares on the market, which wouldn't be such a bad thing for investors at all. They've got a lot of growth still to do. There is still plenty of increases in the amount of people using the apps on certain times. Family monthly active people, daily active users was an increase of 5% over the year, but in the quarter it actually dropped. So it'll be interesting to see if this factors out into next year and into the next quarter. That will be super interesting as well. But this company is by no means done growing, and I passionately believe that that is the case. Yes, they have a significant problem. They've got their first ever drop in daily users, and they've got an awful lot of expenditure going out for Oculus and this real start of the metaverse. But with the likes of NFTs and the way that we've seen the metaverse taking off, I don't think it will be long until Facebook leverages new growth avenues. So what if its daily users do fall and it does trend slightly downwards? As long as there's not significant over 10-20% drop-offs in users, which I don't think will happen, TikTok can't steal absolutely all of that. And TikTok doesn't have its own VR set just yet, and that is where Facebook is one of the first movers and the market leaders in this. So it is not over for Facebook in any way, shape or form. And I think a 26% sell-off that we've seen in the share price is probably quite harsh, to be fair. Yes, you would expect a decline, absolutely, I have no problem with that, but to lose nearly a third of the company's value in just a few hours screams that the company was either massively overvalued. That does happen, but not by 26%, not with all the growth metrics that this company has demonstrated, its profitability, its profit margins. It is and has suffered a little blip, there is no doubt in that at all. However, it is not worthy of a 26% sell-off, and I wouldn't be surprised to see this company bounce back with some good news over the coming weeks. Maybe not back all the way back up to where it was at 323, but at least a significant chunk recovered back out of this. It wasn't so long ago that analysts were talking about this being the third or the fourth $1 trillion company in the United States, and that I believe will still happen. It just might take them a little bit longer in terms of the share price because of the obvious headwinds that they have now come into. But there is still greener and jam tomorrow going on, because I definitely think that the metaverse will take off, and that will significantly give Facebook headwinds later on down the line. So yes, they've got some short term, I wouldn't even call it pain, I'd call it a blip, but in the longer term, again, I definitely think that Facebook will come through this and will eventually recover its share price quite nicely. To me, given the short, sharp sell-off that we have seen, this company, Facebook and Meta, is a buy opportunity right now. I cannot see it dropping too much lower unless, again, there is a massive negative headline, and I believe that this company can recover over the coming weeks and months, especially when the metaverse starts to gain even more traction, the Oculus starts to generate even more revenue, and its margins improve. Just because daily user side of things has fallen a little bit, as long as it just either stagnates and doesn't drop by serious double-digit percentages, I don't see how Facebook can lose too much. Obviously, TikTok is taking a chunk of that, and that is something that Facebook is going to have to try and deal with, whether that be through Facebook itself, Instagram, whichever way it decides to do that. It is sitting on a significant cash pile to do so. So it wouldn't surprise me if they use some of that to repurchase their shares, use it to invest in growth natures, use it to fight back against competitors like TikTok. That is what fantastic companies do, and I do believe that Facebook is one of those companies. Yes, it has suffered a blip, but I believe that it can come back strong and it can still return a significant amount of money to investors. There is already now 26% in the share price based on where it was. That is a significant chunk of money. Even making 10 or 20% on that over some time would be nice. And then there's also the long-term growth and the uptrend in the company to consider too. As long as it can maintain its usership or even regrow it after investing some money, then I see no reason why this share price can't continue to grow, get back to where it was, and then grow beyond that towards getting over the $1 trillion valuation. Thank you very much for watching today, guys. Always a pleasure to bring you information, of course. If you could see your way to liking and subscribing to the channel on the way out, that'd be absolutely awesome. See you in another episode.